Testing 1 million, 2 million, 1 million, 2 million. Excelente. Morning to my brother. Peace and blessings be with you. We're gonna do a quick educational module. Good morning, Team BlackRock and Team Blackstone. This is what we do. We are live. Got my tall blonde roast, brown sugar, dash of cinnamon, half and half, dash of coconut milk. Got some water. Always need some water. Have to hydrate early in the morning. So, I'll give you guys a quick update. See if I can adjust this a little bit. It's a little bit better. Excellent. So I look good for radio. That's some funny stuff. Um, you know, hammering away with this music stuff. It's part of my career. Yesterday we were able to make some quick contact with Eduardo Vidal, better known as Ray Vidal, and I have a defective top here. So you know what I'm gonna do? I'm gonna take the top off so that I can know it's defective and not let it spill all over. Make quick contact. It was a little bit awkward because, you know, my catalog is so big, it's record breaking. And of course, people are like, "Are you serious?" And it's like, "Yeah, I'm the real deal." But I must leave him a quick message. If you guys could bear with me one quick second. Buenos días, Vidal. Ahí le he mandado casi toda la información para su consideración. Si es un proyecto que usted está interesado, se puede comunicar conmigo y veremos a ver qué se puede hacer. Yo estoy interesado en administración por el momento y como le digo, si es un proyecto que usted cree que vale su tiempo, entonces vamos a tratar de trabajar juntos. Pero de todas formas, que tenga un día maravilloso y que Dios lo bendiga. Gracias y ya usted sabe, aquí estamos a la orden, sea como sea. Entonces, what we've done here is essentially relay the message, and the rest is in God's hands because the contract that I'm negotiating has never been done before. Um, he asked me about Guinness World Records. I said I need help with that too. Could you help? Let's go to creativity tools. Let's go to attribute listing and morphological analysis. That'll be our module for today. Let's see what's going on in the markets really quickly. That way we can kind of have a sense of direction. We're going to do a quick five. We're going to go business. And let's see what we can find, right? I'm going to go Hong Kong. You know what I've been doing? I've been sticking to CNBC because of, you know, the consistency that they've showcased our platform. And just to be consistent with all of you guys. I rather go with what works. All of our news sources have shown what their integrity is over the course of time. And as a businessman, I have to go with what works. I can't waste time. Time is too valuable. Let's see, we got a bonus in here. Okay, we'll finish with this. Let's do one more. Make it our top seven. Okay, we'll go with top seven. So very quickly, let's start off with our module. Mm. Get your coffees ready, your chai lattes. Oh, I see there's damage in the cup. And here we go. Attribute listing and morphological analysis. Tools for creating new products and services. Explore creative product ideas with attribute listing. Being creative can be tough. Say you need to design a new product in a hurry. You might have to come up with a working prototype before a trade show, for example. Or maybe sales are flagging and you need to revitalize your existing products, and all you have in front of you is a blank screen. That's where attribute listing and morphological analysis can help. In this article, we'll explore how these simple tools provide a logical step by step process for generating great new design ideas and for discarding the bad ones. What is attribute listing? Attributes are the properties, qualities, or design elements of the product or service that you want to produce. They're the things you need your product to have to satisfy your customers' needs. For example, the attributes of a car would be build material, engine type, number of seats, trunk capacity, color, weight, price, and so on. Or if you want to design a new marketing strategy, your attributes would include the markets open to you, the ways in which your product is used, and the skills you have available. Attribute listing is the process of identifying these key features as they're needed in a new product or process. First, you select the product or process that you need to design or redesign. Then you break it down into its key attributes or qualities. This allows you to examine each attribute in turn and to identify how you can improve its performance. What is morphological analysis? Morphological analysis takes attributes listings a stage further, using a matrix to help you decide on the design of your product. It follows the same basic process as attribute listing, but you can use it to create a new product by mixing the elements in new ways. First, you list the necessary attributes as column headings. See the example below. Then, beneath each heading, you write a list of characteristics for each attribute. Write down as many variations of the attribute as possible in each column. Here's a tip: you could use brainstorming with your team to produce a range of new ideas, or check out our articles, Generating New Ideas and Scamper, to learn more. Next, you select a characteristic from each column. You may already have an idea of the kind of combinations that will work best, in which case, try them out. Alternatively, select characteristics randomly for each column and assess what you come up with. Not all the results will work, but some will, and some may stimulate interesting, and unexpected new lines of inquiry. Finally, evaluate and improve the combination you've decided on until it becomes a viable product with a likely market. Here's an example. Imagine that you want to carry out a morphological analysis to create a new lamp. First, list the attributes that you need to consider. For a lamp, these are power supply, bulb type, size, style, finish, and material. Set these out as column headings on a table as shown below. Here's a note. This table is sometimes known as morphological box or Zwicky box, after the scientist Fritz Zwicky, who developed the technique in the 1960s. Interesting combinations might be number one, solar powered battery daylight bulb, possibly used in clothes shops to allow customers to see the true color of clothes. Number two, large hand crank arc lights used in developing countries or far from a mains power supply. Number three, ceramic oil lamp in Roman style, used in themed restaurants, resurrecting the olive oil lamps of 2,000 years ago. Number four, a normal table lamp designed to be painted, wallpapered, or covered in fabric so that it matches the style of a room perfectly. Some of these might be practical, novel ideas for a lighting manufacturer. Some might not. This is where the manufacturer's experience and market knowledge are important. The next steps involve working the idea into a prototype and conducting market research to establish whether there's a market for it. Here's a tip. Tools like concept sprints and design thinking can be useful for taking your design forward. Here are some key points. Attribute listing and morphological analysis are useful techniques that can enable you to generate new ideas for products, services, and strategies. Attribute listing involves identifying the key design features of the potential product, service, or strategy that you want to develop. In a morphological analysis, you formalize these features in a matrix. Then you choose interesting combinations of items or select items at random for each column. This gives you ideas that you can examine for practicality and market viability. So, when you're developing a new product or service, when you're introducing your franchise or your brand, when you're introducing yourself to the market, speaking this new language, these are some of the key features that you can use as far as how you market yourself to your newfound audience. So this is how I would implement all of these things. One thing I tell all of my students is the fact that people want your signature. It's not what you do, it's how you do it. People just want to see how you do it in particular. So if I give you the recipe for an oatmeal cookie, if I distribute it to a million people, even though it's the same formula, the same recipe, the execution will be handled in a million different ways. So there is no right or wrong here. It's more of the intuition of each individual. Some people have good communication skills, some people are tech savvy, some people can put it all together and show you how they use this formula to build their own. So when you're creating a new product, a new service, a new franchise, a new brand, you should take all of these things into consideration and it will definitely help you in your future. So now let's move on very quickly because we are Team BlackRock and we are Team Blackstone, and this is what we do. Give me one quick second. Let's have a quick break. Cheers to you. Wow, amazing. So here we go. CD rates at an all time high. Can you dig it? Fed officials see restrictive policy staying in place until inflation eases. Minutes show. Federal Reserve officials at their September meeting differed on whether any additional interest rate increases would be needed, though the balance indicated that one more hike would be likely. Minutes released Wednesday showed. While there were conflicting opinions on the need for more policy tightening, there was unanimity on one point that rates would need to stay elevated until policymakers are convinced inflation is heading back to 2%. A majority of participants judged that one more increase in the target federal funds rate at a future meeting would likely be appropriate, while some judged it likely that no further increases would be warranted. The summary of the September 19th through 20th policy meeting stated the document noted that all members of the rate setting Federal Open Market Committee agreed they could proceed carefully on future decisions, which would be based on incoming data rather than any preset path. Another point of complete agreement was the belief that policy should remain restrictive for some time until the committee is confident that inflation is moving down sustainably towards its objective. The meeting culminated with the FOMC deciding against a rate hike. However, in the dot plot of individual members' expectations, some two-thirds of the committee indicated that one more increase would be needed before the end of the year. The FOMC since March 2022 has raised its key interest rate 11 times, taking it to a targeted range of 5.25% to 5.5%, the highest level in 22 years. Since the September meeting, the 10-year Treasury note yield has risen about a quarter percentage point, in effect pricing in the rate increase policymakers indicated then. At the same time, a handful of central bank officials, including Vice Chair Philip Jefferson, Governor Christopher Waller, and regional presidents Raphael Bostic of Atlanta, Lori Logan of Dallas, and Mary Daly of San Francisco, have indicated that the tightening in financial conditions may negate the need for further hikes. Of the group, Logan, Waller, and Jefferson have votes this year on the FOMC. In our view, the Fed has belatedly converged on the lowest common denominator idea that the rise in yields means there is at present no need to raise rates again, wrote Krishna Guha, head of global policy and central bank strategy at Evercore ISI. Guha added that officials want to wait before locking themselves into a longer term position on rates. Markets waffled following the minute's release, with major stock averages slightly higher heading into the close. Traders in the Fed funds futures market pared back bets on additional rate hikes, down to just 8.5% in November and 27.9% in December, according to the CME Group's Fed Watch gauge. Members in favor of further hikes at the meeting expressed concerns about inflation. In fact, the minutes noted that most FOMC members see upside risks to prices, along with the potential for slower growth and higher unemployment. Fed economists noted that the economy has proven more resilient than expected this year, but they cited a number of risks. The automakers' strike, for one, was expected to slow growth a bit and possibly push up inflation, but only temporarily. The minute said consumers have continued to spend, though officials worried about the impact from tighter credit conditions, less fiscal stimulus, and the resumption of student loan payments. Many participants remarked that the finances of some households were coming under pressure amid high inflation and declining savings, and that there had been an increasing reliance on credit to finance expenditures, the minute said. Inflation data points, particularly regarding future expectations, generally have been indicating progress towards the central bank's 2% target, though there have been a few hiccups. The Fed received some bad inflation news Wednesday when the Labor Department said that the Producer Price Index, a measure of inflation at the wholesale level, rose 0.5% in September. Though that was a bit lower on the August reading, it was above Wall Street estimates and took the 12-month PPI rate to 2.2%, its highest since April and above the Fed's coveted 2% annual inflation budget. The PPI tees up Thursday's release of the Consumer Price Index, which is expected to show headline inflation at 3.6% in September and core excluding food and energy at 4.1%. Very nice. Create success. Okay, so here we go. Mad Money with Jim Cramer. How is the rise of GLP-1 weight loss drugs affecting market action? Jim Cramer explains. CNBC's Jim Cramer on Wednesday explained how GLP-1 drugs are influencing market action. He observed that Wall Street is already anticipating their effect on certain companies. An institution's goal is to anticipate not the action itself, but that there will be others reacting soon, he said, and they have to get out ahead of those late reactors. GLP-1 drugs were initially approved to treat diabetes, but many find off-label use to help with weight loss. Popular GLP-1 drugs include Eli Lilly's Mounjaro and Novo Nordisk Wegovy, the latter of which has been approved by the Food and Drug Administration for weight loss management. Even though it seems early to assess the impact of these drugs, they're already affecting stocks, Kramer said. He noted, for example, that companies with products that help treat diabetes, like Dexcom and Abbott Labs, have seen their stock fall. Intuitive Surgical also saw shares slide when executives noted slow growth in bariatric surgeries last quarter, potentially due to increased use of GLP-1 drugs. According to Kramer, many investors don't wait to see how the new drugs will ding companies' earnings reports. Instead, they anticipate negative action and sell off stocks, Kramer said. I know it seems superficial, knee jerk even, but money managers are knee jerk and superficial people. And in the wild cases of Wegovy and Lilly's Monjaro, the more superficial and the more knee jerk they were, the more money they saved, he said. Not a bad point. Don't agree necessarily. I believe that those medicines should be used for their intended purpose, but those are my 3 grains of rice. Is India still a bright spot? IMF upgrades growth, but economists say it will be a bumpy ride. The International Monetary Fund has raised its growth forecast for India, saying the country's growth will remain strong in 2023 and 2024, but analysts warn there will be headwinds ahead. According to the IMF's October update of its World Economic Outlook, India's economy will grow 6.3% in 2023, an increase from an earlier forecast of 6.1%. Economists who spoke to CNBC are also bullish about India's growth, attributing the economy's growth to an increase in consumption, infrastructure spending, and more businesses being set up. But they say geopolitical risk and inflation concerns will be challenging. India will continue to be a bright spot in the global economic picture, Alicia Garcia Herrero, chief economist for Asia Pacific at Natixis, said. The country has been favored by foreign investors in recent years, reflecting its promising long term outlook helped by youthful demographics and a fast expanding middle class. We expect such a trend to continue, she told CNBC. Consumer spending remains one of the biggest growth drivers in the world's most populous nations, she added. India's consumer market is set to become the world's third largest by 2027 as the number of middle to high income households rise, according to a report by BMI, a Fitch Solutions research unit. India is on the map. There is a lot of pent up demand and sentiment is very positive. There is a sense that India is back on the front line, and the propaganda in the media helps consumption too, she added. India's government has taken several steps to improve businesses, and this is attracting global and local investors, said Neil Shah, managing director at Kotak Mahindra Asset Management. The China Plus One strategy is also pushing relocation of global supply chains, and India will be a beneficiary, he added. The optimism in India's growth story is partly because more Indians are choosing to work or set up businesses in the country rather than moving to the Western world in search for better opportunities, Shah said. The West is less appealing than it used to be, Garcia Herrero said, and India is more appealing than it used to be, at least for very talented people. Headwinds remain. While the IMF maintained its 2024 projection of 6.3% growth in India, economists are expecting the country to face a slew of headwinds. Widening current account deficit, resurgent inflation, and heightened geopolitical tensions would be the major headwinds for India, Garcia Herrera warned. Although India's pre election environment is quite conducive to growth, the Reserve Bank of India's loose monetary policy will be creating future problems, the economy said. India is not increasing productivity as much as needed to make their growth sustainable over time, but this will only become a problem in the next 2 decades. It's not an immediate issue. Extreme weather events will also impact India's growth. Heat waves and droughts have caused water levels in southern Indian reservoirs to fall below 10 years average, causing an adverse effect on agricultural and rural recovery, Kotek Shah pointed out. Geopolitical tensions have intensified from rising tensions between India and Canada, as well as the attack on Israel by Palestinian militant group Hamas, which caused oil prices to spike by more than 4% on Monday. India imports more than 80% of its oil consumption, so higher prices will be the impact. India's trade and fiscal deficit of inflation and growth adversity, Shah said. Although economists remain optimistic about India's growth, Garcia Herrero emphasized the importance of foreign investments to keep the economy going. In India's position as the leader of the global south competing with China, India needs more foreign investments to create more manufacturing jobs, she said. Global growth slows. In the report published Tuesday, the IMF said the global economy will continue to recover at a slow pace as a consequence of the Ukraine war, high inflation, and the aftermath of the pandemic. Its projections show that global growth will slow from 3.5% in 2022 to 3% this year before falling further to 2.9% in 2024. Growth remains slow and uneven, with growing global divergences. Global economy is limping along, not sprinting, the fund said. The IMF also raised its 2023 U.S. growth projections by zero point 0.3 percentage points from its July report to 2.1% and hiked next year's forecast by zero point 0.5 percentage points to 1.5%. Very cool. Goldman Sachs warns of hit to third quarter earnings on deal to offload Green Sky. Goldman Sachs said Wednesday that it agreed to sell its fintech lending platform Green Sky to a group of investors led by private equity firm Sixth Street. The deal, which includes a book of loans created by Goldman, will result in a 19 cents per share reduction to third quarter earnings, Goldman said in the statement. The New York based bank is scheduled to disclose results on Tuesday. The move is the latest step CEO David Solomon has taken to retrench from his ill fated push into retail banking. Under Solomon's direction, Goldman acquired GreenSky last year for $1.7 billion, overruling deputies who felt the home improvement lender was a poor fit. Months later, Solomon decided to seek bids for the businesses amidst his broader move away from consumer finance. Goldman also a wealth management business and was reportedly in talks to offload its Apple Card operations. This transaction demonstrates our continued progress in narrowing the focus of our consumer business, Solomon said in the release. The bank is now focused on its core strengths in investments banking and trading and its push to grow asset and wealth management fees, he added. Goldman will continue to operate GreenSky until the sale closes in the first quarter of 2024, the bank said. The expected hit to third quarter earnings include expenses tied to a write down of GreenSky's intangibles, as well as marks on the loan portfolio and higher taxes, offset by the release of loan reserves tied to the transaction, Goldman said. It follows a $504 million quarter impairment on GreenSky's disclosed back in July. The Sixth Street Group included funds managed by KKR, Bayview Asset Management, and Cardworks, according to the release. Private equity groups have played key roles in several of the banking industry's asset divestitures since the start of the year, providing funding for the PacWest merger with Bank of California, for example. Very nice. Stock futures rise as Wall Street awaits key inflation data. Live updates. U.S. stock futures ticked higher Thursday as investors look towards new consumer inflation data for greater insight on the economy. Futures tied to the Dow Jones Industrial Average added 105 points or 0.3%. S&P 500 futures and Nasdaq 100 futures gained 0.4% each. The consumer price report for September will be released Thursday morning. Economists surveyed by Dow Jones are forecasting a 0.3% month over month increase for September and 3.6% rise from the prior year. Investors believe that the strength of inflation indicated in the report will play a key part in whether the Federal Reserve decides to maintain or rise by raising interest rates at its 2 day meeting beginning October 31st. The data comes following a stronger than expected producer price index for September. August CPI print was a bit stronger than we anticipated, though the downward trend in core inflation has persisted. We would hope for that to continue, but we'll be keeping a close eye on the pass through of higher energy prices into broader inflation in the months ahead should they persist, said Vanguard senior economist Andrew Patterson. The ongoing Israel Hamas war has raised questions of a potential oil supply crunch and a resulting rise in fuel prices. If the geopolitical instability spreads to neighboring oil producers in the region, traders will also be keeping an eye out on jobless claims numbers for the week ending October the 7th. Atlanta Fed President Raphael Bostic and Boston Fed President Suzanne Collins will be giving remarks Thursday afternoon, which could give Wall Street more insight into the central bank's stance. Several companies will kick off the latest earnings seasons Thursday. Delta Airlines and Walgreens Boots Alliance will release their results before the market opens. Fastino and Domino's Pizza are also scheduled to post their quarterly earnings. The major average closed Wednesday trading with modest gains, marking a fourth consecutive winning session. The Dow advanced 0.2%, while the S&P 500 added 0.4%. The tech-heavy Nasdaq Composite climbed 0.7%, closing above its 50-day moving average for the first time since September. So technology is up, personal financing down. And let's finish strong. Hong Kong stocks lead wider gains as banks rally. Hong Kong stock jumped nearly 2% in the last hour of trading, leading wider gains in the Asia Pacific region as shares of big Chinese banks surged. Investors looked ahead to key U.S. consumer inflation data for clues on the trajectory of the Federal Reserve's monetary policy. Hong Kong's Hang Seng Index climbed 1.86%, while China's benchmark CSI 300 ended 0.95% higher at 3,702.38 cents. In Australia, the S&P ASX 200 added 0.21% to close at 7103.1. In Japan, the Nikkei 225 ended 1.75% higher at 32,900. Uh, no, I'm sorry, 32,494 and 66 cents. While South Korea's Kospi finished up 1.21% at 2,479.82, both benchmarks were at their respective highest closing levels since September the 25th. Overnight in the United States, all three major indexes closed in the green. The Dow Jones Industrial Average climbed 0.19% or 65.57 basis points to close at 33,804.87. The S&P 500 gained 0.43%, ending at 4,376.95. The Nasdaq Composite added 0.71% to close at 13,659.68. Economists surveyed by Dow Jones are forecasting a 0.3% month over month increase for the upcoming U.S. inflation data and 3.6% rise from the prior year. Stocks of China Big Four banks rise after state wealth funds boost stake. Central Hedron Investment, China's sovereign wealth fund, increased its stake in four of the country's biggest banks late Wednesday in what is seen as a move to renew confidence in its stock market. Bank of China rose 2.65%, while while the Agricultural Bank of China inched up 0.55%. Shares of Industrial and Commercial Bank of China and China Construction Bank rose 2.1% and 2.37% respectively, while the broader CSI 300 index gained 0.79%. Central Hodgin boosted its stake in each lender by zero point 0.1 percentage point from the first time since 2015. Sony announced a new PS5 Slim model that is 18 to 24% lighter compared to previous models and will be available for purchase in November, albeit at a higher price. The company's previous model had a $100 price difference between the standard and digital editions. That closes to just $50 for the versions launching November. The standard edition will cost $499.99, while the digital edition is priced at $449.99. Sony is keeping the price gap to $50 because obviously they were probably losing a bit more on the hardware side on the digital only. Altut Goyal, managing director at Jefferies, told CNBC Street Signs of Asia. Hong Kong's Hang Seng Index jumps 2% lifted by financial sector. Hong Kong's Hang Seng Index rose more than 2% in afternoon trade, leading wider gains in the region, boosted by financial stocks. Index heavyweights are in the green. Hong Kong listed China Construction Bank is up 5.86%, and Ping An is 2.5% higher. HSBC Holdings rose 1.04%. Other financial stocks adding to the index gains include China Life Insurance and China Merchants Bank, which climbed 4.13% and 5.31% respectively. Industrial and Commercial Bank of China popped 5.05%. ExxonMobil's acquisition of shale rival Pioneer Natural Resources is the largest oil and gas merger in decades and one for the record books, says Raymond James, managing director and equity research analyst Pavel Malkinov. On Wednesday, ExxonMobil said it agreed to buy Pioneer Natural Resources for $59.5 billion in an all-stock deal for $253 per share. The deal marks Exxon's biggest since it bought Mobil and is expected to close in the first half of 2024. While it's a good deal for Exxon from a historical valuation perspective, Molchanov noted that it's important to also recognize that Exxon's own stock has been trading at a much lower valuation than it used to. Exxon estimated its production volume in the Permian Basin would more than double to 1.3 million barrels of oil equivalent per day. It's no coincidence that the Permian is the focus of his deal, said Molchanov, elaborating how it is the most prolific and economically attractive basins. Pioneer shares were up 1.44% at the close, while Exxon slipped 3.58%. India won't be hit too badly by high oil prices amid geopolitical risks, DBS says. As market assess and assess the risks from the conflict between Israel and Hamas, DBS says its impact through high oil prices on India could become more prominent if the war expanded to the oil-rich Middle Eastern countries. The Middle East is an important trading partner of India, DBS senior economist Radhika Rao said, as it accounted for 90% of imports. However, fixed retail pump prices will limit the impact on India's inflation. If the conflict expands to more oil producing countries with far reaching consequences, a subsequent squeeze on oil prices will pose a policy dilemma for the economy, not helped by the busy election period ahead, Rao added. National elections in India are due by May 2024, but several state polls are expected to be held before then. India's September inflation data expected to ease. India is slated to release its inflation numbers for September later Thursday, with Reuters analysis forecasting a 5.5% year-on-year climb. The projected reading would compare to a 6.83% rise in August, driven largely by food prices. An easing in food and fuel inflation likely drove a softening in the headline rate, a Barclays report dated early October forecast. That being said, the slower inflation print may still be insufficient for India's central bank to start trimming rates. Even with a large step down to below 5.5%, inflation merely settles back into the upper half of the RBI's 4 plus slash negative 2% inflation target. Mizuho, a head of economics and strategy, Vishnu Varathan, wrote in a daily note he expects that the print will only provide the country's central bank with the comfort to hold, not cut rates, as well as retain a mild hawkish bias. The Reserve Bank of India last week kept its interest rate steady at 6.5%. CNBC Pro Morgan Stanley says these three global stocks will be winners in a world where data is king. Data is set to play a big role in creating new products and services while boosting productivity, and three companies were well positioned to be the winners, according to Morgan Stanley. The bank's analysis chose the stocks for offering structural mid-single digit percentage growth, high and durable margins with adjusted earnings before interest and taxes exceeding 25%, and high cash conversions with strong market positions. Morningstar says the semiconductor is undervalued and names four stocks to buy. Semiconductors are looking undervalued thanks to the sell off in some parts of the sector, according to Morningstar. The research firm said in a report released on October 11th that it views semiconductor stocks as 15% undervalued on a median price or fair value estimate basis of October the 3rd. That's even more undervalued than the wider tech sector, which it believes is 5% undervalued. It named its top stock picks in the sector. Fed officials will remain restrictive policy until inflation eases, September minutes show. Federal Reserve officials at their September meeting differed on the need for more policy tightening, but indicated rates will need to stay elevated until the policymakers are convinced inflation is heading back to 2%. One more hike will be likely, minutes released Wednesday showed. A majority of participants judged that one more increase in the target federal funds rate at a future meeting would likely be appropriate, while some judged it likely that no further increases would be warranted. The summary of the Fed's September 19th to 20th policy meeting stated, watch energy amid period of geopolitical risks, says CT. With the Israeli-Hamas rising concerns about oil supplies, Citi says energy prices will likely be the main driver of the conflict impact on equity markets. Historically, equity markets are usually higher 12M after the start of the geopolitical conflict, despite initial volatility. However, equities have seen significant downside when geopolitical risk catalyze energy crises. Global equity strategist David Grumman said in a Tuesday note. To be sure, Grumman added that a meaningful geoeconomic risk had been applied to global equity markets even prior to the outbreak of the war. Weak demand at 10-year Treasury auctions sends yields higher. Demand was lackluster for 35 billion of 10-year Treasuries at the 1 p.m. Eastern Time Wednesday auction. The Treasury dealers buying 18.7% of the total supply versus a more usual 15.6% average, according to Ben Jeffries, Vice President for U.S. Rate Strategy at BMO Capital Markets. The auction resulted in a 10-year yield of 4.61%, up from 4.289% at the September auction. Afterward, 10-year open market yields rose as high as 4.6180% against an early morning low of 4.544%. The auction saw weak demand with the tail at 1.7 basis points, 0.017%, Jeffrey wrote. The tail measures the high yield bid minus the note when issued yield. A positive tail denotes weak demand and a negative tail strong demand. Non-dealer bidding constituted 81.83% of the total versus usual 84.4% average, Jeffrey wrote, adding that since the result, rates have ticked higher in the follow through. Well, ladies and gentlemen, there you have it. So let's take a quick moment to kind of reassess. You see everything that's going on in China, the Middle Eastern conflict. You see the potential in the 10-year Treasury bond. You see how they're buying the dip from 15.5% to 18%, just a 3% increase. You see everything that's going on in China. China's still moving strong. That's where my market inclination would be. Everything is technology. Technology is the only thing that's coming through. In the department sector, those kind of investments are not really my style, but I understand for some people it may be a little bit different, but that's my take on it. My coffee is off the chain. Love it. Have no fear. Batman's here. Check my social media here. Have a few things to analyze. But I want to thank you guys for joining us once again. This is all the time that we have for today. So we'll see you guys first thing tomorrow morning. Team Black Rock and Blackstone. May you conquer everything that's in your path today. May everything that you touch turn into solid gold. Always remember to dream big because dreams come true. It happened to me, and I know for a fact it's going to happen to you. Remember, you are a brand, you are a franchise, you are a digital marketer, and this is what we do. All we do is build successful businesses. So, have an amazing and wonderful day, and I can't wait to see you guys tomorrow. Team BlackRock and Blackstone, I'll be back.